In this video, I'm going to show you a new interesting and smart indicator on TradingView I've found. Now, I know the majority of technical indicators available right now only perform well in a trending market, but this indicator has been consistently performing well even when the price action is unstable and raging. I've also developed a complete strategy with this tool that I will show you in this video so that you can follow along and make a ton of money from trading crypto, stocks, and practically any market with a high level of volume. Then, to show you the real numbers behind the indicator, I will backtest it using my strategy 100 times on a 15-minute time frame. Alright, let's get into it. We're currently looking at the price of AUD USD on a 15-minute time frame, and as I mentioned before, this indicator will work on all markets and time frames. You could use it on 30 seconds, 1 minute, 1 hour, 1 day, or even a month if you really wanted to, although I have no idea why you'd want to sit there for 12 months. So, navigate to the top of your TradingView setup and locate the Indicators tab. You can then search for Polynomial Regression Channel and you'll know if it's the right one because the developer will be Van Wall. Now, just click on it to add it to your chart. A pretty cool thing I've noticed is this indicator is quite similar to the linear regression channel, which means it's not a brand new indicator I had to learn how to read. We can actually add the linear regression channel indicator to our setup so I can show you the concept behind this indicator. Now, you can probably already see the linear regression channel is a 3-line technical indicator and is primarily used to analyze the upper and lower limits of an already existing trend. Some people have actually asked me what linear regression is, and to put it simply, it's a statistical tool used to predict the future from past data. Now, for trading, this indicator will give us potential buy and sell signals based on price volatility. It has 3 different parts, which are a linear regression line, which is this middle line here, the upper channel line here, and the final part is the lower channel line down here. So, unlike the polynomial regression line, a linear regression is a straight line that best fits the prices between a starting price point and an end price point. Both of these indicators are used to determine the overall trend direction. This middle line is what acts as a midpoint of the trend, and as you can probably predict, the upper and lower channels show the top and bottom of the trend. And if you look when the price action is moving in the uptrend, the middle line changes its color from red to green whilst pointing upwards. But looking at when the trend is bearish, our line changes from green to red and is pointing downwards. Now, a side note, you need to keep in mind that the larger the channel, the higher the level of volatility, and the smaller the channel, the lower level of volatility. Okay, so there are multiple ways we can utilize this indicator and they will all work with our strategy, but we will need to make some adjustments to this indicator first. So, accessing the indicator's settings by navigating to its settings icon, we can head over to the Style tab and get rid of the source and smooth source value. Then moving over to the input section and change the data smoothing period from 10 to 100, then uncheck the following options. Now, once the smoothing period is changed to 100, you will notice the indicator is much smoother. We do need one final indicator, so again heading up to the Indicators tab and searching for Volume Oscillator. This is probably one of my all-time favorite indicators because it does such a good job at filtering out losing trades. Right, our setup is complete. Let's understand the entry rules for this strategy. So starting with long trades, to enter, we first need to see the price action break above the upper band while the middle line is still a green color. Also, the candlesticks have to be green as well. After this, we need to check the price action has crossed and closed above the upper band after the pullback. And finally, the bars need to stay green during this whole time with the volume oscillator greater than 0%. And this last step is the most important to get right. Now, with our conditions met, we're going to place a buy order at the close of our trigger candlestick. The stop loss can either be set at the swing low or at the middle line. For this strategy, we're going to be targeting 1.5 times the risk. And just for context, here is a long signal which is invalid. As we can see, the price action broke above the upper band, but there was no pullback which followed. And here we have another breakout, but there is again a problem with this entry, and if you've been listening, you can probably notice it straight away. As the price action made the first breakout, the middle line was being colored in red, so this stops any long entry. Okay, it's time for short trades. So the rules are exactly opposite of long trades. We need to see the price action break below the lower band while the middle line is a red color. Then the price action needs to pull back into the lower band where it crosses and closes above it. Next, we need to see the price action break below the lower band for the second time whilst the bars stay red the entire time. And again, just like the long trade, this part is extremely important. And finally, to get our confirmation for the entry, the volume oscillator must be above the middle line. We can place our stop loss at the middle line or at the recent swing high and a take profit target at 1.5 times the risk. Now I hope you guys have understood the strategy. I'm going to spend a couple of trading sessions compiling trades into a backtester and bring you guys the results. And just like that, 100 trades completed over the course of 2 months have been backtested and compiled. Whilst I was backtesting, I got to see some of my first trades I did almost 3 months ago using this strategy. And incredibly, even over the course of 3 months, the effectiveness and accuracy is the same, which just highlights how underused this indicator is. So now I'm curious what you guys have been waiting for. Our win rate using this strategy was 71% and our account gained over 426%. Now when I say our account gained, I mean the value of our account at the end was 426% more than when we started, which is outstanding. Looking deeper into the stats, we can see that the profit factor we got was 4.9 and we had 10 consecutive wins against 3 consecutive losses. So solely based on these numbers, I can confirm this strategy is consistent and reliable. Of course, you must remember that all backtests are unique and you shouldn't invest based on these numbers alone. The best idea is to test the strategy out on a demo account before using a live account with real money. This is also very helpful to make sure you've mastered the strategy, as any small mistake or oversight can cause your trade to lose. I definitely experienced this when I was first developing the strategy, as in a live market it's incredibly stressful and easy to miss a signal. And just like that, this video is done. I hope that you got value out of it, and if you did, it would be greatly appreciated if you could leave a thumbs up on the video and subscribe to the channel. As always, if you have any questions or want me to test out a strategy you've found, comment it down below.